Hey, it's Mac with PriceActionTradingSystem.com, and it is Thursday. It's December 3rd, and this will be our chart lesson for today. And this is going to wrap up the week. Believe it or not, the week's already gone. Seems like we just came back from Thanksgiving, and now we've already got another week in the book. So Christmas is going to be on us before we know it. It's pretty obvious we're getting towards the volatility's really slowing down, the volume's slowing down. I mean, this seems like a much more normal day. And there's not a lot of trades here today. You had to be really patient. These are hard trading days because, especially for newer traders, because this is where you have to be really, really patient, and you don't get a lot of opportunities. So when you do get one, you have to pull the trigger, but at the same time, you have to just sit and be very, very patient. So it's not going to take long to go through these trades today because there's not many of them, and it's going to wrap our. It should be a quick chart lesson today, and then we'll wrap it up, and then wrap the week up. And no chart lessons on Fridays if you're new to YouTube. Um, I don't do chart lessons on Fridays. I try to get out of here early on Fridays and get a break. And for years I did them Monday through Friday, and it's just got to be too much. So I do need a break from these. A lot of time goes into these videos and I like doing them. I do them for myself as much as I do them to help for anybody that wants to come in and watch them. I mean, really, they force me to do my chart study each day. So it helps me improve my trading. That was the original reason I started doing these for my own self. These started on paper 15, 18 years ago, and I probably got several years worth of paper chart uh, lessons that I did for myself just as my daily journal. I send that out with the manual now, so if you ever bought a manual, that is in your zip file, that PDF chart review file, and that's what it's there for, just so you can go through them and find some more charts to study and compare it to what I was seeing. And again, they are older, so some of we've tweaked things slightly. The basic rules are all the same; they'll never change. I call it the law of charts. It was the same 30 years, 40 years ago as it is today. Price action still follows the same kind of price movements and rules and so forth. That never changes. Now, how we enter and the type of signal bar we look for, and whether it's congestion or not, some of those little small things have changed. So you may see some different things. So don't get caught up on those chart lessons, old chart lessons, if you're looking at them. Occasionally I get people that'll call right into me or post something in the forum or whatever and say, hey, this just, I can't make heads or tails of this. And I'll look at it and I'll say, yeah, well, that's because we don't really do it that way. There's only a few of them in there like that, but there are some where I mean, my trading has evolved. I'll tell you right now, there's trades in there that I marked and probably said were good trades that I wouldn't take today, or I'd mark them aggressive most likely. So my trading has evolved as well. So and your trading will too if you continue to do this for years, because I still learn new things even today. There's nothing compares to to screen experience. And I will say this real quickly before I move on. Screen experience is important, but just trading alone and then closing up at the end of the day and going home, you'll never get to be a better trader. You need that screen time so that you get used to watching prices and get the feel for price action, start to learn the personality of price action. But you'll never become a better trader if you don't study that chart at the end of each day. You should study every trade you take diligently. And when I say diligently, figure out what went right with a trade and do more of it, figure out what went wrong, figure out if it was a good trade, because sometimes you take bad trades that work and that just reinforces bad habits, and that's why it's hard. You'll take a trade that might work out wonderfully, but the next 9 times it doesn't work at all, and you keep trying to relive that moment and it never comes, and you end up losing and becoming a losing trader. So that's really important that you study your charts and your trades, even your good trades, and make sure that it was really a good trade, because sometimes we get lucky. And I mean, I get people that send me their charts all the time, and they were 5 for 5 the day, and I wouldn't have taken any of the 5 trades, and tomorrow and the next 5 days in a row, all those trades would probably fail every single time. Those kind of days happen, and that reinforces really bad habits, and you try to relive those moments and you wonder why you can't. It's because they weren't a good trade to begin with. So make sure you study your trades, all of them. Make sure they're right. Figure out what you did right and do more of it, and reinforce those good habits, and then figure out what you did wrong or why you took trades that worked that were wrong, and try to correct those issues. That's how you become a better trader. Just trading alone and then quitting at the end of the day and going home, you're never gonna solve that puzzle. You're never gonna get better. And you can watch some expert trade for years, but if you don't study your own tendencies and your own trades, you're never going to get better, because my tendencies will be totally different than yours. And you watch me trade and you see what I do, but you most likely won't be able to recreate exactly what I do, because a lot of it's based on experience and feel and my personality and how I see the market. Sure, I can teach you how the price action laws and the rules and all that work, but you still have to go through that learning process on your own. Watching somebody else doesn't do it. So even if you've got a trader friend that's very successful, you still have to trade on your own and study your own trades every single day. I can't get that across to people sometimes. They don't want to believe it, but trust me, that's the key to success. But anyway, let's get to the trades, and I spent 6 minutes on that, but that's important stuff. And I get on my soapbox sometimes, and but usually never fails. Somebody will write to me the next day and say, I felt like you were talking directly to me. So I don't know. I get these urges to say things, and generally I think there's a reason for them, because generally it helps somebody. So you just have to excuse me. Sometimes these ideas and thoughts come to my head, and I have to say them. So anyway, let's get to the trades. When I came in early, we were really going sideways, but it was quickly evident that we had some kind of trend going here. It was hard to I couldn't tell if it was the green one or the spiking channel. And honestly, I think they both were correct. You can see we're moving up here, and you can see prices playing this midline of this green one, and you can see that prices are playing off the support and resistance cleanly. And we had an overshoot here, and there's really two legs up, and we turned down. But if you look here, prices are even working off the midline of the green one, which is this one. Look at this. So they're both in play. This is just within the green one, and that happens. Price action works in layers. So if you hadn't heard me say that, make sure you get that and understand that, because people get so hung up on trend lines, and they think that if they can't get the trend line exactly like I get it, then they're not right and they're going to fail. And that's not necessarily true, because you might have seen one of these patterns and not seen the other one. And even within that, we got sideways patterns and down patterns. So you'll see this stuff, and you have to learn to understand that when you get to, like when we got to right up here and you start seeing this resistance, you don't know which one of these are going to win out. Nobody knows. I don't know. You don't know. And so you have to be careful. This is where you might have to just sit on your hands. It was so tempting to go short up here every time. And if you'd have went short right here, of course your signal bar is no good, and that's an inside bar. So the next one you could take was right here. It would have worked, but it would have scared the bejeebies out of you, because you almost would have got stopped out before it turned back down. And then even then it starts back up again. And it's really tempting to enter there, but the best thing to do here is to wait. And notice I don't mark a trade until it was clear we had a downtrend working the other way, and that this was no longer in play. And this was no longer in play. So actually the yellow one, we had a break, and you really had almost two measured legs up there to a new high. So that one played out. I would say it's either here or here. It doesn't really matter where you measure it. And then we started back up from here. And you can see that we had two measured legs up, and prices continued to try to go higher, and they couldn't, and sold off. And also, the other measured move that I would measure would be this move up here, and then look for a measured move from here. We didn't quite make that one. And that usually tells you something. If it keeps trying and can't, eventually it'll go a little further in the other, you know you're going to get a good move in the other direction, and we did. We moved all the way back down to 36.64, which today was a pretty good move. So anyway, you got to be real patient sometimes. But anyway, here we're just going sideways, and there's resistance here, and it looks like a range, and it actually got tighter. But I like this one because we made the high. We tested it once, we tested it twice, and then we made a little double top, and we turned down. And the way you may play this one is when it came out the other side. But if you play it that way, your stop has to go above this bar, and you notice that that would have saved you. But if you'd put your stop anywhere else, you'd have got stopped out. So anytime you enter on an engulfing bar, you have to use the previous swing, high or low, depending on which way you're entering, as where you put your safety stop. So don't forget that, because people seem to miss that sometimes. And this might go up and down a couple of times out each side before it finally closes bearish. And so if you enter on that engulfing bar, you can't take that chance, especially one that's only 7 ticks. That's not a very big bar. And that's the thing, the volatility has gotten much lower, and the bars, we're getting back where we can almost meet the 8. You pretty much can probably trade the 8 tick rule again. So if you can and you're a new trader, you should probably stick to that. But anyway, you get a double test of this high, so it's really a triple test. And you got plenty of room to get out here. Just make sure the key to entering here is you got room to get out. So you might have to let it break lower and drop a limit order and come back. You don't want to be too conservative and put it too high where it won't come back and fill you, but just enough to where you got room to get out here. And wouldn't have mattered you got out anyway, but you want to be sure you got room to get out. And then it just keeps going sideways. And it was tempting to enter here. I don't know if it would have worked or not, but the problem is that you know, by this time you've just got so much congestion here, and it's not really clear. We should have gone lower here if this was really a range going lower. And so that's when you probably really want to already draw this. You would have already had this resistance across here. So, but this is really tempting. And if you entered here, you probably got burned. I can't tell. It doesn't look like it quite gets 4 ticks. I can't tell. I'd have to count it. I don't want to spend the time to do that. But I would avoid that. When we didn't go lower, and we couldn't get higher here, with this almost really just kind of going sideways here, I just skipped that trade. It does break out and go higher. You don't really get a chance to go long there. You don't want to go long into that resistance. And notice, I meant to show you this. You want to measure this range, and when we broke higher, look for a measured move, which is right here. And we actually went a little higher, but you can see that came back into play, and that kind of held the range for a little bit. And this is just too congestive. I don't see anything that's worth entering in here. You're really having to enter right in the middle every time on any entry here. Not very good signal bars. You finally get a breakout here. Let me back up here. You probably would have been tempted to go short here, but you need to wait on that lower high. And we don't get one. And signal bar is no good here. But really by this time your trend line's proven out, and you really don't even want to look for shorts. You should be looking for longs at this point. So if you got a good long here, you might go long, but you don't get one. I mean, this signal bar is too bearish, and this is just the measured move here. Let me move that out of the way. But you got a little short-term channel moving up, and again, you just don't get any chance to enter. There's just no safe entries here. It comes back to this trend line here, but very bearish bar. Higher lows, just very neutral bar. And then we come off the high side. Well, you don't want to be going short up here. There's no setups for shorts, and you don't want to be going long right here. Even though it looks like two-legged pullback to the EMA, it's what I call kind of no man's land. After coming off the highs, we should be coming back to the lows. Even though that gives you enough, notice where we end up going before we don't go back up to the high. We just kind of work sideways back to the trend line. And we really already had a break in a new high, so that gives you another reason to be real careful for longs. If you're going to take any of these trades up here, my choice would probably be short. But the problem with that is you don't know if the green one's not going to be good as well. And you can see prices playing off both of those midlines, off both lines. It does come back here, and you actually get a second entry long right here. If you've got enough room to scalp out here, you might take that trade. I don't recommend it. It's just too congested and too unknown what's going on here. But you might go long there, just playing. Let me just go ahead and mark it. There's a little range there, and there's a reason you can argue to take that trade. That's the way I would have played. You can see that little range, and that's you made the low, you test it once, you test it twice. And if the key, you see exactly where it went, right back to the line and then turns down. So if you've got enough room there, you can take that trade. I'm going to mark it aggressive because I was more tempted to go short there. And you can't go short into that support with this support being right here too. So you could go long technically by the rules, but it's aggressive. So I'm just curious if it worked. Let's just count it. I hate to waste the time, but I'm really curious if we had room. All right. Your entry would have been 77.75. And you can see it would have been a 4-tick failure. So the only way you could have entered that would have been on a limit order getting another tick back because you didn't have room. You didn't have room to scalp out there. There was only exactly, by the time you entered, there was only 4 ticks left to that high. And that's a good example of what I'm talking about. You would have to use a limit order and get a little better entry there, which you could have. You see this bar backed up. If you'd have entered right there, you'd have had enough to get out. So that's how you'd have to play that. But notice what happens. We finally break out. We try to go higher once. We try to go higher twice. And there's also a second entry here. Normally, I probably would have left this trade alone, but that bar is only 3 ticks. You can see it, 1, 2, 3. Very low entry. It's right off the key entry point. There's probably even enough room to get out before you get to these lows here. Pretty sure there is. So I like that trade just because it's so low risk. And the odds are, I mean, we've met all the rules to turn over here. Now, if the green one's valid, we're probably still going to go make a move up. But on a trap here, right here, when people are still thinking long, I like going short. And you can see how good it worked. Look how fast that thing dropped. 2 bars in a row, just very bearish. And then there's really a third before it kind of bounced back a little bit. So you had a lot of people trapped there, and that's why I like that one. It's a failed second entry long, and it's a second entry short. But more importantly, all these people that were getting long up here figure out they got to exit. And again, it's tempting to go long here. If that signal bar would have been a little bit more bullish than that, I probably would have marked that one green because look how far away we are from the EMA. And there does appear to be an overshoot of this channel here. And it rockets straight up. Comes back. I'm assuming that most people saw this green channel too. And prices are going to try to make a retest. But we move up. We get a close outside new high. You don't want to go short right there. You need a lower high, which comes here. That looks a little too congestive. We're still above the EMA. It is a lower high, though, so you may take that trade. It's looking like it's going to be a range day, especially when we came back and tested it again and still couldn't get through there. So you may take that trade. It's a little bit aggressive. But then we run back up, and now we got a double test up here, and you get this big bearish bar. I probably wouldn't go short 1 tick below it, but when it broke lower there, you might drop a limit order in here and about halfway or so and see if it comes back. If it does, then you can take it. But you could actually go short right there by the rules. We've tested that so many times. We're probably going to make a leg down here. And I would actually measure this leg and look for one like that. And you can see that puts us down here where we found support. We did drop a little lower, but then we came right back into that area and went higher again. And there's also previous support across here from earlier. So that really matches up. So that would be the target I'd probably look for. We took a long way to get there. But anyway, you got this channel working down. You get a break, first entry, second entry. Now notice that bar is way too bullish to enter on a second entry short. But if you look here at this high, that's a first entry and a second entry. So it's basically a failed second entry long. When we're looking for prices to go lower, you got plenty of room to scalp out. Your entry would actually be one tick below this inside bar. Normally we don't use inside bars, but this is a failure or a trap, and that's where the trap and the failure occurred, was one tick below that bar. Your safety stop still has to go one tick above this bar because that's technically the signal bar. And so again, that's aggressive trade. I'll be honest, I just skip it. But notice we're working down, and you get a first entry, and then you get a second entry. So you got another failed second entry long and a lower high here, a nice bearish bar. I like going short there. And then I marked this one too. This is really sideways, but it confirms that trend line. I actually drew this trend line off the lows, off these first three swings, and I drug it up. And so when this works back over there and gives you this relatively small bar of 4 ticks, again, I mean, I can't remember getting 3 and 4 tick signal bars. It's been a long, long time. The key here is, do you have enough room to get out before this low? And you do. And if you look, it really kind of looks like 2 legs back as well. You know, it's mostly sideways. So I went back and forth about whether that one should be green or not. But we're looking for another leg down like this one too. And you can see we basically got a perfect measured move on that one. Actually, I take that back. You should have remeasured this from there and then measured from there. And that still gives you the original target. So, but we still got a little room down there. And the main reason I like them is just because it's low probability, and we tried to go higher 1, 2, 3, 4, 5 times. And we're making, notice how we're making lower highs here basically too. This high, we made a lower, this one closed here, but this one closed down here, and each one of these highs, even though this is equal, it closed down here. So you can tell we're kind of losing momentum there. So you'd only be looking for a scalp out of that. So make sure that's clear. And then we drop on down. We pull back to the trend line here, but that's where your measured moves were. Your close from yesterday was there. Some reasons to be a little concerned about going short right there. So I don't think, especially when this just ends as an inside bar, and obviously it's congestion by that point. But when it drops down there and it's that far away from the EMA, and it is off the lower side of the channel, it's aggressive. But these are the ones I like to catch sometimes that you get a good run, and look at this one go. That's why I like those. And a lot of them are going to fail, but if you're going to take aggressive trade, this is the kind you want to trade. The one that puts the odds in your favor. I mean, a lot of times it'll break higher and drop down and just enough to stop you out and then go higher. But we really already had that happen here, right there. It broke higher. A lot of people with a measured move and all being there, people were trying to pick a bottom right there, and they got burned. So they usually do that once or twice, and then everybody's scared of it then, and then they'll let it go and look at it. It takes off. There is a failed second entry short here, but it's just not a very good trade. We're just kind of working sideways there. I don't see anything I like. And that takes us into 2 o'clock. I mean, just like I said, there's not a lot of trades today, and even a few of them, 1, 2, 3, 4. 4 of the ones I marked are green, and I see 1, 2, 3, 4, 5 trades, and this one's real close to being green. So 4 to 5 trades. Just not much happening today. So if you couldn't find any trades today, it's because there weren't a lot of them. Now, if you force those trades, that's another thing. Don't force trades. But anyway, this is 24 minutes. I said it was going to be a quick chart lesson. So I'm going to wrap it up. This is going to wrap up our week. We'll be back again to do it Monday. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next